Friday, September 29th, last day of September. Market analysis, Stan Ehrlich. And you know, I always start out with the indexes. This morning, I'm starting out a little late at 10:07 a.m. California time. We are low and last after opening significantly higher this morning and below yesterday's close. We're down on the day, $1.50 in the S&P 500. And only need about $1 and a fraction more to have a new low closing price at the end of the week for weekly charts for the trend down. You know, I've been talking about 406, 407 sometimes, but right there for the minimum downside objective for the S&P, the SPY. And we're heading there fairly quickly. Also, I've been correlating this with what I refer to as the October lows. In the last 30 years, we have had a low of some significance, sometimes so profound as to be like last October 13th, the bottom of a bear market, the beginning of a bull market, to the day. So I think we're going to have something similar. In fact, in October, we love to bottom out. It's only been 3 times in the last 30 years. So that's 90% of the time it's worked. And we're heading down quickly here. That's very likely, and I'm forecasting that we're going to see new lows next week, maybe early next week. I don't think it's going to happen today, but we are sliding very quickly. Now, nothing has happened with this pattern so far that has been out of the ordinary, frankly. It's right out of the damn textbooks. The rally this morning was up underneath the neckline and came fairly close. You're just not supposed to get above it and or essentially close above it. That's most important. And it didn't. And now it looks like it's going to continue working its way lower. It's dropping very, very quickly. We're down 160 now, low and last, basically. We'll see how much lower it goes during this YouTube. So the DIA. Okay, we might, by the way, have an outside down day if you can get below 424.77 on the spider, and we're at 26.97, call it 427. So I want 2.25 more points lower than the current quote. And that'll be a bearish engulfing and very increasing quite a bit the likelihood of it dropping like a rock. Maybe the economic problems we've got at the moment will not be resolved over the weekend. Maybe they will. I am not an economist, that's for sure. So DIA again, and I'm going to try to make the rest of these pretty quick because I want to talk about the Santa Claus rally for the first time this season. And I know it's premature, and I also want to talk about the October lows a little bit more. I'm going to show you some examples. We already have a bearish engulfing in the DIA. It is now lower than yesterday's low, and that happened just in the last few minutes, with this last sharp break to the downside right here on the DIA 1-minute chart. So now it is below yesterday's lows right there. And certainly on the opening bell in the first 60 seconds of trading, the high of the day was created. It's been going down since then. I sometimes nickname these kind of breaks waterfall because they just keep coming more than you expect and don't stop until finally, of course. We're back down to unchanged on the QQQ at the moment, and that is about the low of the day. Whoops, something happened on this. There we go. So, yeah, if we can get down below yesterday's low with the bearish engulfing, maybe, we will have a weekly downside breakout on the head and shoulder top, which has only been tested, and that was just Wednesday. So I have to think that's not going to happen. And Monday or Tuesday, we're going to have a bearish breakout on the QQQ and start the head and shoulder top working its way down to a minimum downside objective of around 322.25 I've got, which is very interesting because that correlates with not only a 50% retracement in most indexes of the bull market move from October 13th low until the July 27th, was that it, I believe? I think so, of the bull market. We're still in. That's the last high and basically the top of the head and shoulder 3-month head and shoulder top. Everything has been working great on this so far. We even closed at least most of the gap, I think, of the QQQs that was above the market. And I talked about that yesterday. All right. The next chart is not going to be the DIA 1 minute. I want to show you the Russell 2000. And on a daily chart, it also closed some of the gap that was above the market on the opening, essentially. And it didn't finish the job, but that's probably it. I say gaps are almost always closed. They're like a black hole in space that tend to suck the price action back into them, and that's exactly what we had from an oversold condition. Now I'm looking for new lows, and real soon we might have, we're not too far away from, a bearish engulfing on the Russell 2000. Boy, this could be a really significant down day. We're 170 lower now on the spider, back down to the lows after a few minute bounce. Let's go to the October lows. And now the September is, for all practical purposes, behind us. I am looking for the market to bottom out in this green circle because I have pinpointed, I hope, the price level, as well as, of course, the month of October left to right in the circle, October. And the middle of the circle happens to be that 406, 407 price I mentioned before. And this is the spider October low chart. And this goes back to 1993 and shows you how often the market bottomed out around or in October. That low is October 30th. The one before that was just about October, not quite a day or two early, but it did bottom out and start the big rally in October in 2020. October. Not a very profound bottom at all, but if you bought anywhere basically in October, you would have made money in that year, 2017. This was November 3rd, and that's one of the three that goofed in 30 total years. So 90% of the time, we have seen this October low sequence like crazy, going back to 010, 03. You can stop the video anytime you want, of course. And back to 1993 on the far left. And current. So, futures. The E-mini, now basically low and last. We're down 170 on the spider in the upper left-hand corner, that little red number, negative 175. Gee, almost 180 any second now, maybe. It's going to get oversold again at the rate we're dropping, but that's all right. That's what bear markets do, or I should not say bear markets, downside corrections, especially big ones. And this seems to be, in my opinion, a correction. It's a good one, probably the biggest one we're going to have before the final top sometime next year. I'm thinking maybe even a year further out than that. Depends. I'm not a long-term forecaster usually. So next chart. Natural NQ. Not breaking the neckline yet like the QQQ. So all we need to do is get below yesterday's low on a closing basis, and we will probably be breaking out of that neckline and making new lows. So old trend. It's going to happen, I think, today or tomorrow. I'm at Monday, but maybe Tuesday, real soon. Next chart. Bonds broke down badly yesterday. I mentioned potential exhaustion weakness. We have popped back up nicely today in bonds. Interest rates are not the main economic talk at the moment, so I don't think this means too much other than bouncing out of a oversold condition. Not going to go too far, last too long, and I'm still expecting it to build a bottom of some significance and not necessarily have what's called a V bottom, one day down and boom, like October 13th in the stock market last fall, straight back up. That's a V bottom. So the rally could come up to 117.23-ish, and I don't expect much more than that. And the 10-year notes, same kind of commentary. The rally might even stop at about 109.5 on the way up. We just got too oversold, and no surprise that it's rallying, but I don't think it's a major bottom yet. Next is crude oil. Blow off top. Yesterday commenting about exhaustion strength and overbought conditions. So we're correcting, but it's already reached my minor minimum, which is around where it is right now. But I think there's a very good likelihood of 87.99, or let's call it 88 flat, and very possibly 83.30. I can't rule that out. That's the best significant support. It may take a week or two to get there, and it doesn't change the long-term trend, which is up. Next, heating oil. I still think this is topping out, and I'm not looking for much more strength. I think it would be great if it turned down. Today's high would be the high, and we started to work our way lower next week immediately. Next, natural gas. That's a yawner. Sideways, nothing happening. Can't say too much. Maybe we'll have a modest bullish engulfing here today. Next, gold dropped like a rock last couple of days. Oversold conditions, but again, that's not unusual in bearish breakout situations. And that's what we've got. Gold looks like a long-term bear trend is perpetuating. So it may be oversold for a couple of more days in a row here. The next stop on the downside could very well be at around 1,820. Next chart. I checked. This is a correct high. It happened overnight, so to speak, early this morning. And it is 23.80. 23.80. That looks like bad data, but I looked at 1 minute charts and it ran all the way up there, topped out and came all the way back down and took around an hour to do it. So that's a legitimate spike top. Outside down day, now getting oversold again. I think we're breaking out on the downside significantly here and very soon. This red zone is held 3 different times. I think bye-bye. It's not going to work this time. And you're going to start dropping down to test the lows at 20.67 that we did catch last September 10th. The bottom, major move up, double top highs, sold both highs, ER signals, sold the next high and sold almost the next high, which was only a month ago, September 1st. Well, beginning of this month. Caught the bottom there and caught the bottom there. And I already mentioned, of course, that one on March 10th. Metals have been really great to us this year so far. Next, plywood. No, I'm sorry, platinum. Old days. So third time down, slight new lows, didn't quite get oversold. I don't think this is going anywhere. It might close this gap at 967. Call it 968. That looks possible. I can't tell for sure. Support did hold pretty darn good, and we got extremely close to oversold. I would have loved to have seen it oversold, but, you know, close is almost there. But, yeah, it's going to rally a little more, and maybe that gap is going to get closed. Next is oversold conditions in oversold, support area and oversold. And that's exactly what I like for a situation to cause a rally, and it certainly is. Yesterday it started, followed through pretty nicely this morning so far. I think it has a good chance of coming up to at least 385. And I'm not going to rule out a test of this resistance zone just under 4. Next chart. Soybeans are breaking out to the downside. This is very, very interesting. This has a lot to do with bean oil and meal and so on. So we're not holding at a major, major support area going back many months, couple of years, year and a half. Okay, so the next stopping point, if we don't reverse immediately and close inside the blue area or higher, of course, and it doesn't look like that's going to happen, we're probably going to go all the way down to 1070. Can't help it. That's what it looks like. Now, there's going to be a bunch of bounces on the way down. The first bounce may be at about 1252, but that's 25 cents lower than the current. Yeah, that looks very plausible. I'll think I'll put a line there later. Next, bean oil. Breaking out to the downside yesterday on a closing basis below what I now am calling a neckline of a double head. Also, you could call it easily a double top. It is the head of a head and shoulder formation. The first shoulder rally high was on July 5th. The last one was a buy signal that was terrible on September 15th. Obviously, a small loss on that trade. And another one that is probably, yeah, that's legitimate. And this one, I'm going to put a line across so it's not on the charts. It's a goof, so to speak. I shouldn't have. With RSI being as high as it was at that time, that should not have been green. Anyway, the formation is breaking out to the downside on a weekly basis also. This should produce a move down at a minimum to 49.80, which happens to be a support area of some significance. So that's it. I'm looking for another $5 down here on the bean oil from 55 to 50 ASAP. Next, but it'll bounce a little in the way down 2 to 3 weeks. Soybean meal now is testing support almost. The track record I'm talking about in grain so far is not good. This is going to break the support level that's at 378. And then the next thing we're going to have to handle is 364, 365. And I think it's going to get to 365. Next is corn. We have a bearish engulfing outside down day, Japanese candlestick sell signal. It does not contain red, so therefore I'm not getting a sell signal in the ER signals like we did, for example, on April 24th. And I made a little bit of money, not a very good signal, but made some money on April 5th. That one was the high of the move. That's the ones we like. All right. And we've got some green bottoms in the interim that have worked pretty well. So I'm expecting immediately this market next week is going to go into new low ground. Next is wheat, which is plummeting today. Wasn't expecting to see a big down day like this, but support has just point blank not held. But because it's such a big down day, is driving itself into oversold conditions pretty darn quickly, pretty fast. I'm wondering if this has something to do with the war. That would be interesting. We got a sell signal, by the way, at the very beginning of the war, and that was on March 8th of 22. And that was after a whole series of limit up bid or lock limit up days in a row. Unbelievable sell signal. I won't see another one like that for maybe a decade or two if I'm still around. So it's oversold. It's going to bounce. This is too much, too quick. Next, cattle. Trying like hell to top out and just can't seem to do it. Today is a good down day, but I'm not overly impressed. I'm not getting any red signals. I wished I did. If the high was higher than yesterday's high, we would have a red bearish engulfing, but we don't. All I've got is 3 drives to a high, oversold condition throughout the time frame, way high on the highest RSI level, and that didn't stop the price from moving up, and that was on the date of July 21. So, could develop into something very bearish, but I can't tell yet. Next chart is hogs. I think the support level at 70 is probably not going to hold. We're nowhere near oversold. Resistance has stopped the market several times now in the last couple of 3 months. The longer term trend is down. And I'm not thinking that 69, 70, 60, 70 flat is not going to hold. The next, it's not. And then the next stop on the way down, I don't know, there's a couple, 3 little small support areas, except of course for the bottom at 53. This is quite bearish, or going to be. And I'm assuming that very quickly next week, we're going to close below 69.5. Next chart, OJ. Blow off top, overbought conditions, typical correction so far. It's done it just like this several times already and still kept going up. I'm not getting any major sell signals yet. Next chart, cocoa. Similar looking situations, and it has topped out really nicely. I keep talking about support at 3,310, and that's where I think it's heading. We'll see what happens when it gets there. If it breaks below 305 or whatever that low is, 310, then we've got a much more bearish situation. Next chart, coffee, and support is not holding. This is what I think cocoa could do. And we are now in new low ground for many months, 2/3 it looks like of a year, almost all of this year, we're going to come down probably to 135. And that's only about 11 points lower than current. That's not even that big a deal. And it is a big deal because look at the way it's acted at that same level on these perpetual or continuation charts since, well, in this case, 2019, way back in here, resistance, 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 support, and years later, support again. So 135 is going to stop or try to this bear move for a while. Next chart, sugar. I don't know. I'm going to pass, actually. I don't know. Next, cotton. Resistance has stopped the rally. It was a little bit above my resistance zone that I had a red bar in. I probably should adjust that upwards a little bit. Something like this now would be a little more appropriate. Yeah, I'll leave it like that. And we're one way or the other, we're back into the same trading range we were before, which is kind of a no man's land. First support is going to be 85.20, and I think we're going to get there without a problem. Next support is 83.40, and I think we're going to also reach there, not that far away. And I cannot rule out 76.60. That would take a few weeks. Next chart, E-mini. You guys have a great weekend. Let's see where the market is here before I part real quick. And oh, I'm sorry, Santa Claus rally. We have it down to the minute. I've been studying this rally and lecturing about it for decades. The basic concept you'll hear come close to Christmas is you want to buy just before Christmas and sell in the early part of January, or some kind of variation on that generalized crude comment. We have 3 different trades. We do it at exactly a certain time of day and get out on a certain time of day on certain dates. And the track record is quite profitable. I'll show you in the next couple of weeks, way before you need to be worrying about getting into the trade if you want to this coming Christmas. But this last 2 years ago made 3,300, I think it was, during the time frame that these three trades occurred. There's just one little example. Now, where are these indexes? We have bounced off of a low on the 1 minute chart here nicely, but nothing particularly great. Still down on the day, a point plus a point and a half, and barely higher on the Qs, 20 cents. I think there's a good likelihood it'll make new lows. You have a great weekend.